let's dig into this. Imagine standing right at the pulse of a nation, one that's changing fast, where big economic reforms are reshaping almost everything in daily life. Think about it from school fees for your kids to, even the price of pepper for your dinner. That's exactly where we're going today. We're pulling back the curtain on some really compelling reports from our colleagues here at Addis Fortune, Ethiopia's biggest English weekly. We've got a whole stack of their recent stories, covering, everything from the federal budget and major banking shifts to really pressing stuff like road safety and even the surprising cost of a common spice. Our mission, really, in this deep dive is to pull out the most important bits of knowledge from these reports, helping you get a real grasp of the forces at play in Ethiopia's economy right now.
Yeah, and what's particularly striking, I think, is how these issues that seem so different, a school fee hike here, an Auditor General's report there, a bank listing over here, how they all actually connect. They weave together into this bigger story about the country's growth, sure, but also its persistent challenges and its resilience, too. So this deep dive, it'll give you a pretty clear view of how those top-level policy decisions, how they filter down, how they impact ordinary citizens. You see the successes, definitely, but also those stubborn issues that just won't go away.
Right. Let's kick things off with the big picture then, the big numbers. Let's talk about the federal purse strings and, crucially, accountability. Our colleagues reported on the unanimous approval of the national budget, which, on paper sounds pretty good, a straightforward win. But there's always more to it, isn't there?
Indeed. So the legislature recently approved a pretty hefty budget, 1.9 trillion birr. And while, it passed unanimously, the real questions pop up when you look at how that money is actually being managed. And this is exactly where the Auditor General, Meseret Damti, comes in. She's got this reputation, for being incredibly sharp. And her latest report, it's got some figures that really make you blink. They complicate the picture quite a bit.
Make you blink how? What did that sharp pencil of hers uncover this time?
Well, the audit, it shows these ongoing challenges, even though there are some improvements. Like 115 agencies got clean audits this year. That's up from 79, so that's positive. And this is a big but a staggering 85.8% of past irregularities worth about 17.6 billion birr are still unresolved, just sitting there. And this isn't just like money not spent. It's a serious bottleneck for development in Ethiopia. The real insight here is that the problem isn't just allocating the money. It's this chronic, almost systemic failure to actually do the projects and get back public money that's owed. We're talking 14.5 billion birr in budget money that just went completely unused for capital projects, for development. Now, that is down from previous years, but it's still a huge systemic failure. Look at the Ministry of Agriculture alone. They failed to use 7.8 billion birr, just couldn't spend it.
Wow. Billions of birr just sitting idle. Money that could have built roads, schools, hospitals. That's really staggering. What are the real world effects of that kind of failure year after year?
Exactly. And it's not only what's unspent. There's also this ballooning pile, 32.9 billion birr in public receivables, money owed to the government that hasn't been collected. The Ministry of Health alone accounts for 6.7 billion of that. And here's the kicker. Only a tiny slice, just 14.2% or 2.91 billion birr, has been collected from money identified years ago. So it really begs the question, like opposition MP Abraham Berta put it so sharply, how do we justify this waste while burdening citizens with tax hikes? It hits public trust hard, and it limits what the government can actually deliver.
That's a powerful question. Absolutely crucial. Okay, let's shift gears a bit from government spending to monetary policy. The central bank governor, Malamir Tufin, has claimed a bold reconfiguration of policy and foreign exchange management. Sounds good, right? But given those red flags MPs raised about inflation, the parallel market, how reconfigured is it really? And what's the biggest hurdle to hitting those single-digit inflation targets they're aiming for?
It is a critical shift, no doubt. The central bank hiking the policy rate to 15%, the lending rate to 18%. That signals a real break from directly monetizing fiscal deficits, basically stopping the central bank from just printing money to fund government spending. The goal is more independence, better inflation control. And a key takeaway here is the tripling of foreign exchange reserves. They now cover 2.7 months of imports. That's a 235% jump. Huge. Plus, export revenues doubled and remittances up 22%. So there are positive signs.
Okay, those reserve numbers, they do sound like a significant step forward. So what were the main worries that the parliamentarians brought up then?
Well, despite those better reserve numbers, MPs did raise some serious red flags. They pointed to the ongoing foreign exchange crunch people feel on the ground, and that widening gap between the official rate and the parallel market rate. Plus, deposit rates just aren't attractive for savers. Inflation is still a big concern, 14.4% in May, That's a long way from the governor's, ambitious single-digit target for next year. And looking down the road, there are these long-term fiscal risks, like Abu Dhabi's deposits swelling to 174 billion birr at 4% interest. With birr depreciation, that could hit 390 billion birr. So yeah, there's progress, but the path to stability, it's still full of challenges, especially managing the exchange rate and building confidence in the official market.
Right, so while those national figures paint that crucial macro picture, the real punch of these economic trends, it's often felt most sharply in just everyday life. Let's start with something weighing heavily on a lot of families in Addis Ababa, the cost of sending kids to school.
Absolutely. For so many parents, the start of the school year brings this specific kind of dread, tuition fees. Our sources at Addis Fortune really detailed this. City education regulators had to step in, capping private school tuition hikes between 40% and 65%, but that was only after many schools tried to raise fees by, get this, up to 263%. Just imagine being a family on the median urban wage suddenly facing fees over 6,500 birrs a month for just one child.
That's an enormous burden. Do we have stories, like specific examples of how families are coping or not coping?
We do. We spoke to Mehiret Yohannes, a mother of 3. Her monthly fees at Maria Rubado School jumped 65%, up to 6,560 birr. She told our reporters she felt she had, quote, no choice now but to change public schools, just couldn't afford it. Another parent, Tegan Work, he managed to negotiate. His school wanted 45%, he got it down to 32%, but he's still worried about what happens next year. Fresh shocks, he called them. And the private schools, they argue their costs are way higher than the caps allow. Property owners demanding 17-20% rent increases each year. Some schools paying over $1 million birr a month just for their compound lease and supplies. Costs have doubled.
Wow, it really sounds like a classic no-win situation. Schools squeezed, families squeezed. What does this tension tell us about the bigger picture in education?
Well, it throws this widening two-tier system into really sharp relief. And the quality gap is stark. I mean, think about this. Over 95% of grade 12 students failed the national exams in the last 2 years. 95%. So it really makes you question the long-term sustainability, especially for private schools. Experts are warning, just capping fees without also giving some support like affordable land leases or maybe low-interest loans for building it could end up throttling a sector that actually serves nearly half the students in Addis Ababa. And meanwhile, the public system, it's buckling under the pressure. 98,000 kids transferred into public schools just last year. The cities had to pour 1.9 billion birr into building new classrooms, labs, cafeterias, just trying to keep up.
Okay, moving from classrooms to, the streets and building sites. Another critical area impacting daily safety has seen some big moves. What were the main findings and sort of the debates around road accidents and construction safety?
Yeah, a key thing here is the government's kind of two-pronged approach to public safety. For road safety, there's this big overhaul of driver licensing happening. Nearly 10,000 drivers are set for really tough competency tests. The Ministry of Transport and Logistics, they blame unethical behavior by drivers for something like 68% of accidents. But, and this is where the debate comes in critics, everyone from truck operators to academics, they say that view is, quote, overly simplistic and very biased. They point to much deeper systemic problems, things like poor driver motivation, widespread substance abuse issues, really terrible wages, not enough vehicle checks, and even corruption in the vehicle inspection system. And look at this statistic. 86% of road deaths in Addis last year were pedestrians, often linked to speeding and just poor urban planning, not only driver scale.
Right. So it's a much more tangled web than just blaming drivers.
Yeah.
What about on the construction side? What's happening there?
Very similar story, really. Addis Ababa authorities are launching a major crackdown on unsafe building practices, and this was triggered by a really tragic number, 142 worker deaths between January 2022 and June 2025. One single site had 33 fatalities over 2 years, often because of flimsy wooden scaffolding collapsing. A city study found something pretty shocking. 99% of Ethiopia's construction workers have had zero formal safety training. 99%. Now, industry folks, they acknowledge the problem, but they're calling for collaboration, for actual budget set aside for safety, and crucially, for training safety professionals. Because right now, the country just doesn't have enough qualified local trainers. It really highlights that gap between having rules and actually enforcing them effectively.
Let's shift focus again, this time to the financial world. The Ethiopian Securities Exchange, the ESX, it's still pretty new, right? But we're already seeing some interesting developments, things that could really change the game for capital markets here. What does this mean for investors, for businesses need cash?
Yeah, these are definitely crucial first steps for Ethiopia's, budding capital market. We saw Gada Bank become the second financial institution to actually list on the ESX, That's a pretty big deal. It gives its 30,000 shareholders liquidity they didn't have before. You can actually sell your shares. And this bank, it's only 2 years old. It posted a net profit of 247.2 million birr by the end of December 2024 after starting with a loss. So they see listing as a strategic move, better shareholder value, more transparency. And then on the investment banking side, you've got a wash bank. They just had a record 22 billion birr gross profit. Now they're setting up a dedicated investment banking subsidiary. They're the third big player to jump in after Wigagan and CBE.
So the ESX is starting to get some momentum, and we're seeing more specialized financial services pop up. What are the bigger implications here? And are there potential downsides we should watch out for?
Well, the big implication is diversifying how companies get money and making it easier to attract investment. Both are absolutely vital for economic growth. But, experts like finance professor Dakito Alamu, they offer a word of caution. Public ownership, especially for new listings, it can bring governance headaches, particularly around protecting the rights of minority shareholders. Plus, complying with the rules from the Ethiopian Capital Market Authority, the ECMA, and the National Bank, the NBE, the main regulators, it's not optional. And it can be really expensive, especially for younger companies and for investment banking. Sure, a wash bank has size and a big client list, which helps. But economists are warning against a gold rush mentality. The market's still pretty shallow, and there's a serious lack of skilled people. So there's a real need for solid training and really strict internal risk controls to stop, risky speculation that could actually hurt this new market.
Okay, another big financial shift our sources flagged is in digital payments. The Ministry of Finance has mandated open access for digital payments in the public sector. How's that going to impact you, me, anyone interacting with government agencies?
This is a genuine paradigm shift. It basically forces all federal agencies to accept every licensed electronic payment method. No more playing favorites with state-linked platforms like CBE or Telebur. The aim: more financial inclusion, more choice in how you pay, and better transparency. It's a really big deal. And just to give you some context, digital payments actually overtook cash payments for the first time in 2023-24. We're talking 9.7 trillion birr processed digitally. Telebur alone handled 1.81 trillion birr of that.
So it sounds like more convenience, more options for citizens. That's good. But what are the roadblocks? What's stopping this digital payment revolution from fully taking off?
That's the million-dollar question, isn't it? The directive is ambitious, yes. But the structural problems, they're still significant. We're talking about unreliable electricity, patchy internet access, especially outside the main cities, not enough point-of-sale machines, and just generally low digital literacy among a lot of people. Financial analysts are warning that unless these systemic issues get tackled, the directive might not achieve all its goals. Especially things like making sure frontline agents have enough cash on hand liquidity constraints, and sorting out how money moves smoothly between different banks and payment providers. The policy's good, but the infrastructure needs serious work to catch up.
Okay, finally, let's turn to agriculture, the backbone of the economy for so many Ethiopians. And we're going to dive into something really surprising, a crisis hitting people's wallets directly. The crazy high price of pepper.
Yeah, it's this bizarre paradox, isn't it? Record harvests, yet prices are through the roof. Abeba Dereja, she runs a small spice branding shop. She told us her struggle. Wholesale pepper prices doubled from 500 birr to 1,000 birr a kilo in just a few months. Just to charge customers 1,200 birr now, and her sales, they've dropped by 2/3. Even restaurants are feeling it. Taration Bar and Restaurant saw pepper jump from 500 birr to 800 birr in 3 months. And the really wild part, as you said, is that this is happening even though Ethiopia reported record harvests. 5.1 million quintals of red pepper in 2023-24. Forecasts are even higher.
So if there's plenty of a pepper being grown, why the crazy price hike? It just doesn't add up. What's the disconnect? Where's the breakdown between the farm and the market?
The core issue, it's waste, plain and simple. Up to 40%, 0% of harvested red peppers apparently rot before they even get sold. Why? Poor post-harvest practices.
Yeah.
Like farmers drying peppers out in the open, often just on the asphalt. That invites mold, contamination, so a huge chunk of the harvest just isn't usable. Then you add rising fertilizer costs, rising labor costs for farmers, and in some places like Halabazone, there's this fungus sear-neckel root rot that's wiping out crops. Big losses for farmers there. Plus, you've got old problems like using impure seeds, poor field drainage, and even, believe it or not, these unofficial checkpoint fees that some rogue officials apparently collect along transport routes. All that adds up to the price you pay, so the pepper crisis. It's like a mini picture of the bigger problems in the whole agricultural supply chain. Lack of infrastructure, weak enforcement, not enough training. It means even a good harvest doesn't guarantee stable prices or help farmers much.
That's a perfect illustration of how these big systemic problems end up right on your dinner plate. And staying with farmers, let's touch on one more challenge they're facing. These tax audits that are causing real anxiety for farm cooperatives.
Right, these cooperative unions, they're meant to help millions of farmers, right? Get better market access, pool resources. But now they're suddenly getting hit with unexpected tax bills. Some have had their bank accounts frozen. Operations are just grinding to a halt. Take the Benchmaji Farmers Association Union. They're facing a 6.8 million birr tax bill. For uncollected withholding taxes, they didn't even know they were supposed to collect. The root of the problem seems to be just a lack of clear communication and guidance. Everyone knew the unions were exempt from profit tax, but many didn't realize they still had other obligations like withholding tax on crops they buy, or employee income tax, or registering for VAT. Officials themselves admit there was a communication breakdown, where the message "no income tax" got twisted into thinking no tax at all.
Oof, that's a critical misunderstanding. What's the risk here? What happens if these cooperatives, which support so many farmers, actually collapse because of these tax debts?
The risk is huge. If these unions go under, it directly threatens the livelihoods of millions of smallholder farmers who rely on them. Especially since, in some cases, the tax demands are actually more than the entire capital of the union. Now, the Ministry of Revenues, they're trying to soften the blow, offering deadline extensions, promising training sessions. But experts are saying what's urgently needed is a really big push to educate everyone involved, the unions, the tax officials, and clear, simple guidelines on exactly what counts as union income for tax purposes. It's a classic case where just clarifying the policy and communicating it properly is as vital as the policy itself.
Wow, what a deep dive indeed. We've really covered a lot of ground, haven't we? From those huge government budgets and ambitious financial reforms, all the way down to the very real, very tangible impact of things like school fees, and even the price of pepper in your kitchen. It's just so clear that Ethiopia is juggling so much right now, trying to balance these big, ambitious reforms with some really tough, deeply embedded everyday realities.
Yeah, and if you step back and try to connect all these different stories, all these threads, what really jumps out is this powerful theme about the critical role of, follow-through. Robust enforcement, transparent processes, and support that's actually targeted and based on real information. Whether we're talking about making sure public money is spent wisely, or making roads safer, or genuinely supporting farmers, the success of any policy, it seems, isn't just in how clever the plan is on paper. It's really about the nitty-gritty, the meticulous implementation, the constant, clear communication down the line. Which, I suppose, leaves you with a big question to think about. In a world overflowing with information with ambitious plans, where do you think the greatest impact really happens? Is it in crafting that theoretically perfect policy? Or is it in the tireless, often unglamorous work of making sure it actually functions day to day on the ground?
That is a powerful thought to leave everyone with, and it really ties together so much of what we've talked about today. Thank you for joining us on this deep dive into the pages of Addis Fortune. We really hope you feel a bit more informed, maybe had a few aha moments to take with you. Until next time, keep digging for those insights.